Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of business and finance. Today, we are diving into Amphenol Corporation's latest quarterly report to see if they are still building strong connections or if their business is starting to fray at the edges. Before we dive in, if you love getting the real scoop from these filings, smash that like button and subscribe to the channel and join our Discord community linked below to keep the conversation going after this video. Alright, let's get to it. Amphenol is showing some serious growth this quarter, especially compared to last year. Their total assets have jumped significantly, going from about $21.4 billion at the end of 2024 to a whopping $27.1 billion by September 2025. That is a huge leap, showing major expansion, maybe through buying other companies or expanding their own operations. Their accounts receivable has also seen a large increase, jumping from $3.2 billion to $4.5 billion. This basically means customers owe them more money, which could be a sign of increased sales, but also something to watch to make sure they collect that money. Now, this is interesting. Their goodwill has shot up from $8.2 billion to almost $9.9 billion. Goodwill on a balance sheet usually means a company paid more for an acquired business than its identifiable assets were worth. This massive jump in goodwill strongly suggests Amphenol has been busy acquiring other companies. On the flip side, their accounts payable has also increased from $1.8 billion to $2.4 billion. This is what they owe to their suppliers, which tracks with higher sales, but also means they are using more supplier credit to fund their operations. Turning to the income statement, the top line number, the sales figures are impressive. For the third quarter of 2025, net sales were $6.1 billion, up from $4 billion in the same quarter last year. That is a massive 53% increase year over year. And for the first 9 months of the year, sales climbed from $10.9 billion to $16.6 billion. Another 53% jump. This is not just good growth, this is explosive growth. Looking at their different business segments, the communication solutions part of Amphenol is really driving this growth. Sales in this segment alone shot up 96% year over year in the third quarter. They specifically call out artificial intelligence applications as a major driver, which makes sense given the huge demand for AI infrastructure right now. This segment now makes up about 53% of their total sales, showing its critical importance. The interconnect and sensor systems segment also saw an 18% sales increase year over year, which is solid growth. They also highlight AI-related applications here. And all this sales growth is translating to the bottom line. Operating income in the third quarter nearly doubled from $819.5 million last year to $1.7 billion this year. For the first 9 months, operating income went from $2.2 billion to $4.1 billion. This shows they are not just selling more profitably. But Amphenol is not stopping there. They are actively planning to buy CommScope's connectivity and cable solutions business for about $10.5 billion. This acquisition is expected to close by early next year, and they are lining up significant debt financing for it. They are also in talks to buy Trexon for about $1 billion. This tells us they are very confident in their future and are aggressively expanding through acquisitions, which is a classic Amphenol strategy. Now, we need to be careful with these numbers though. They have incurred about $133.8 million in acquisition-related expenses for the first 9 months of 2025. These are costs like amortizing acquired backlog and inventory step-ups. These costs slightly mask their true operating profitability, so when they present adjusted figures, it helps give a clearer picture. For example, their adjusted operating income for the first 9 months of 2025 stands at $4.2 billion, which is even better when you remove these acquisition costs. Looking at other comprehensive income, which is a bit more technical, we see some fluctuations, mainly due to foreign currency translation. It is not a major driver of their profit, but it shows the global nature of their business and the impact of currency exchange rates. Amphenol continues to reward shareholders through dividends and stock buybacks. They repurchased 6.1 million shares for $493.9 million in the first 9 months of 2025, and they have increased their quarterly dividend. This commitment to returning capital to shareholders is a sign of financial health and confidence. Their pension plan obligations are well managed, with relatively small costs being amortized each quarter. This indicates their long-term employee benefits are stable. One very interesting item they mention is the impact of stock option exercises on their tax rate. When employees exercise stock options, the company gets a tax benefit that can significantly lower their effective tax rate. For the first 9 months of 2025, this benefit reduced their tax provision by $162.6 million. This is a nice boost, but it is tied to stock performance and employee option activity, so it can create volatility in their reported tax rate. They are also keeping an eye on global tax changes like the Pillar 2 framework, which aims for a global minimum tax. While it seems to not have impacted them much yet, they are monitoring it closely, which is prudent. Now for our take on Amphenol Corporation. The story here is clear aggressive growth driven by strong end market demand, particularly in its datacom and AI applications coupled with a relentless acquisition strategy. Their sales and operating income are soaring and their profitability is improving even after accounting for acquisition-related costs. The risks we see are the massive goodwill on their balance sheet, which could be impaired if acquisitions do not perform as expected, and the increasing debt load needed to fund these large deals. They are also exposed to global currency fluctuations and the general risks of doing business internationally. However, Amphenol's management has a proven track record of executing acquisitions successfully and integrating them smoothly. The demand for their products in key growth areas like AI and advanced communications appears very strong for the foreseeable future. Our conclusion is that Amphenol Corporation is firing on all cylinders. They are expanding rapidly organically and through acquisitions, and their financial performance reflects this. While the risks are present, the company seems well equipped to manage them. It is a company to watch given its strong position in critical technology sectors. What do you think about Amphenol's growth strategy and their latest results? Do these numbers impress you? Or do you see red flags? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and be sure to subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.